Mr. Chairman, thank you very much. Chairman, welcome. We're delighted that you're here. This is your first time here, but you'll get used to coming back. You'll be here twice a year, so your report to Congress is important, and we do count on the factual nature of that. I'd like to refer, if I can, to 3 questions and allow you to speak instead of myself most of the time. Number 1, housing interest rates, that would be on page 21 and 37. Then understanding better the agricultural stability of that marketplace. I represent a hugely agricultural district. And second, or lastly, the labor market outlook, that's page 16. I'll let the gentleman please move forward, and I'll prompt you now on the first one, housing interest rates. You would please talk to us, your view of that. It's higher than what I want, but you're the person that's in the seat today.
So as I mentioned in my opening statement, prepared remarks, the economy is solid. Financial markets look like they're in very good condition. But when we look at housing markets, the story is much more uneven. 30-year fixed-rate mortgages, which is really the relevance of much of this discussion to a lot of hardworking Americans, it's higher than it's been, and in part, that's because of inflation that has been above the Fed's objectives.
Okay, and looking forward?
So we have...
Your goal, what can we look at you and say, what is our new chairman going to do about that?
So he's going to deliver price stability with his colleagues at the FOMC. And what we can do in making sure that people are confident that the change in prices is at such a level they don't have to think about it and they don't have to talk about it. That is consistent with long-term Treasury yields being lower, and that's also consistent with mortgages being more affordable.
Well, I agree with that, and I'll look forward to that. Agricultural outlook, as you know, farmers, the farm economy is going through some changes. Your viewpoint on that?
Yeah. As you know, the Fed does not target particular sectors, but that doesn't mean these sectors aren't incredibly important. The housing economy matters to the economy, the overall economy, and so does the ag economy. It's the breadth and diversity of the U.S. economy that gives it its strength. It's the dynamism of what's happening in each of these sectors, including in agriculture, that gives us great comfort that economic growth can be materially higher than it is. We are not afraid of productivity-led growth, and that's not unique to AI. That's across all sectors of the economy. As I mentioned to Chairman Hill, we're looking for growth to be broader, and the change in prices, the inflation in prices to be more limited. Agriculture is not immune to either of those developments.
Well, the Agriculture Secretary has been added to some of your important committees to make sure there's discussion. I hope that you will listen to her. It is important for you to understand that when people talk about the stock market or investment, farmers and ranchers look out in their backyard at the cost of their equipment, at the cost of their land, at the cost of things. They don't have a stock market. They have their own investment. And I think that the Secretary can be there to completely continue to remind you of that. Labor market outlook really looks good. Page 16, sir, your take.
Yeah, so the labor market has been remarkably resilient. The increase in nominal wages has been solid. You might have heard in my comments at the beginning of this a bit more focus on the price stability part of the mandate. I want you to know, though, that there is no disfavored part of the legislative remit that you gave us. The dual mandate is your word to us that we're going to focus on price stability and on full employment. I intend to do just that, and if I could add one other thing, in my view, the two parts of the mandate are not in conflict. This is not an either-or proposition. The more we can do to deliver low and stable prices, the more we can get it such that people aren't worried about inflation, the more employers are going to want to hire more workers. So you gave us a remit. We take both parts of it seriously. As we look out the window now, the labor markets look to be in pretty good balance. We've got some work to do on the inflation front.
Well, we in the One Big Beautiful Bill encourage people to go back to work. And that is why we do not tax overtime pay and why we do not tax what would be tips We need to get people back in the marketplace. We hope you helped us out, Mr. Chairman. Welcome to us, Mr. Chairman. Thank you for your time.
Gentlemen,